John, I'm not 100% sure what's going on with that, man. I do know that some people can, some people cannot. I did copy it straight off of Zoom. The morning live button does work as well too, right underneath the trade room, so you can get it from there. If you still having problems, you let me know. Good morning, YouTube. How we doing? This is Dylan Yerkes with the Santarelli Trading Exchange and Breaking Chart Alerts. Mr. Dave Santarelli will be joining us today. He is just going to be starting a little bit later than we are right now. I just wanted to run through a couple little things that I had pulled up for you guys for the morning, kind of run through pre-market movers and stuff like that before Dave hopped on for Day Trade Friday. We got a couple minutes here till market open. Sea of red going on. I'm going to see if I can join it from my personal computer real fast, see if that works for me over here. Well, I mean, I was able to use the that link. I typically myself do not use the Zoom app. I don't have it downloaded on my computers. The reason I do it is I prefer to join in from the browser. Typically, when you join in from the browser, you typically don't have any kind of problems going on with that. So that might be something that's going on. So we'll go ahead and get started here since markets are about to open up. A couple things as we go into this. I just have a few news articles I wanted to show for you guys. Dow futures fall 400 points on fear that the Fed is overdoing it, which is something that we were already talking about. Stock futures were lower on Friday to close out another losing week as investors fear the Federal Reserve's aggressive hiking campaign to fight inflation will lead to an economic downturn. We've already been saying this. You hear it everywhere now. Everyone's starting to get on board with it. The Fed on Wednesday enacted another supersized rate hike of 75 points and indicated it would do another at its November meeting. So this means that the markets are already pricing in another aggressive rate hike. That's why we are seeing everything start to fall off even more. That's why we're seeing SPY already open up right here at that major support that we've had drawn for I don't even know how long. I draw these support lines out here because they're basically kind of target levels as to where I see everything coming down to. So this is basically, had we been somewhere up in here, you know that the market sentiment is to the downside. You could be using this as a hedge. Let's switch this over to the 1 minute so we get an idea of what's going on. Markets are open. We could. Oh, it's looking like it's headed down. But we also very well could get that 370 tag, have a little bit of a bounce to kind of start today before moving lower. It all just depends. I don't believe we're gonna have that. I think it could just be a pretty much down day, but we'll watch and wait and we'll see. Continuing on with that little article right there, bond yields have soared this week following Fed's actions, with the 2 and 10s rates hitting highs not seen in over a decade. Stocks positioned to suffer the most in a recession have led this week's losses, with the CDS SPDR fund off by more than 5%. Real estate sectors down by 6%. Goldman Sachs cut its S&P 500 target. I have that one up here. Let me pull that one back down. I have their actual numbers on that. Over here, this is Bloomberg. This is a completely different article saying the same thing. A rout in global risk assets deepened as the UK's government planned to boost its economy with tax cuts and spending fueled concerns about tighter monetary policy and growth. They're also factoring in now some heavier rate cuts. So you're starting to see this not only here in America, you're starting to see it across the global spectrum basically too. This is going to cause a global slowdown. So a dollar gauge rose yet another record, in 10-year treasuries climbed to the highest in more than a decade. See, again, that's why I said yesterday about running through different news articles to try to get the same idea so you know exactly what's going on. Goldman Sachs Group slashed its year-end target for the S&P 500 index from 30 to 3,600 from 43. That's a big drop. Citing an interest rate, citing a higher interest rate path from the Federal Reserve, strategists gave up on a year-end rally for European stocks as private sector activity in the region continued to contract. So, as you see, just negative sentiment across the board. You got another thing over here I wanted to share with you guys about some oil. today's coverage, this is a different article. This is the Wall Street Journal. I scour through all of them. I like looking at everything that's going on. Investors got a fresh jolt Friday when the UK announced a larger than expected tax cut plan. That sent the pound to another 37-year low, and borrowing costs in the UK jumped sharply, rumbling through the government bond market elsewhere. This all affects the global markets. We all work together for the most part. So, but then down over here, oil prices hit 8 months low. This is huge to pay attention for. Oil prices fell to the lowest levels since January as fears of a global recession accelerated and the dollar strengthened further. Crude benchmark Brent declined 3.1% to trade at $86 a barrel. And those highs on the oil, I had it up here. Highs on the oil, just a few months ago were all the way back up here in the 120s, 125 area. And since then, the demand for oil has just significantly dropped. As we get these interest rate hikes and more of these foreign investors have more of these Federal Reserve reserves on their balance sheet, that's when you pick those up, that's government debt. They're picking up American debt, and as you raise the interest rates aggressively, you're making that debt much more expensive. They're not going to be wanting to spend more money on this kind of stuff. So that's why you're seeing the demand in oil fall off as well too. Even though we're having energy crisis, the market is worried about growth and is sending commodity prices down. It's a very bad cocktail of this and a stronger dollar. The stronger dollar is not good for the rest of the economy. It may be good for us in some sense, but overall, if you think about it, a strong dollar just means a more risk-off sentiment. That just means that that's a safe haven where everyone's dumping into right now. I was reading, some articles yesterday as well too about there's a global dollar shortage across the rest of the world as well. So that paired across with everything else is just a very bad combination of things across the board, which is why we are seeing just the nasty, just heavy equity selling off. See, as you can see, like I said, we could have had a little bounce, but as it looks like it's pushing through right there. Very nice, John. Good job on that one. Nice way to start the day. Can't complain about that. We will see what happens today. We could get a rally in the markets, could get a nice little bounce in the markets. It all just kind of depends. See, so right here, many key commodities, including oil, are priced in dollars. So a stronger greenback also reduces demand because they become more expensive. As you can see, this is a chart of the crude oil futures that we just kind of looked at as well too. Brent, WTI, West Texas Intermediate is down lower than Brent is right now. So stocks to watch. This is one thing as well too. FedEx, Boeing, and Costco, the delivery company, which recently rattled markets with a sales warning, reported a 20% drop in quarterly profits and said it plans to raise shipping rates and cuts costs. The stock was down 2.8% pre-market today. That's a big one to watch as well too. These are all Boeing. Boeing is the plane maker agreed to pay 200 million to settle a Securities and Exchange Commission investigation into allegations its former chief executive made misleading comments about safety risks after two of its jets crashed. Shares edged 1.8% lower. Costco, consumer spending, all this is kind of stuff to kind of to look out for. Health right over here, healthcare stocks. So this is the stocks on that right there. The performance over the past 6 months, as you can see, not very much going on. So negative sentiment across the board. That's things that we are watching. These are all these play not only into the stock market and with trading, but these play into our everyday lives. The prices we're paying at the pump, the prices that we are seeing across the board. So just things to kind of watch out for, guys. It's not looking too pretty. We're breaking through this support right here, that 370. The lows of this support back over here on June 17th, excuse me, 362.50. After that, as you can see, not much. If we break those lows right there at the 362.50 where I have here, with the next that we really have is all the way back down to this area over here at 320. That's a big drop from where it's at. That's a 50 basis point drop. That's huge. So man, right now it's just negative market sentiment across the board. SPY's pushing down. Q a little bit more of a basing pattern kind of going on to start the day. The Dow, we got a nice solid down move on the Dow. Russell 2000, a little bit of a basing pattern right there on Russell. Not a lot of positivity. Not looking too incredibly hot. That JP Morgan trade, I call that. I'm kind of disappointed I didn't take my own advice and get in to this one. That one would be paying out nicely. We could definitely see as soon as this pops off the bottom of this range right over here at about 106. We'll call it a nice 106 even target level. I'll put that on there, see if that gets tagged over here today. I'm not in this, but I definitely could be interested in possibly jumping into it. It is on a bit of an overextended move. I do want to see a little bit of some relief before we do that, but if we just get that continued downside pressure, there's no reason to not. Home Depot bouncing off those lows right now as well too, giving the markets a few minutes to kind of settle in and whatnot. All right, all right. Just watch land waiting. Just watching landing waiting. Pull up a DJ at 3 minute. It'll give you a 15-second leader. So on entries and directions. Oh, he's still talking about. Right, absolutely, guys. So just kind of watching, seeing what's going on. I am going to be interested in some SPY puts myself today too. I will not be, taking any official trades. I don't do that. That's all Dave. But if I see a nice setup, a nice pattern forming, I'll be sure to call it out for you guys. That's what we're here to do. I'm just those that Bank of America, that JP Morgan trade. Look at that. That would have been the one to trade right there. Past those supports. I mean, you're pushing all the way back down to 30 level right over there from where we could have been in right over in this area kind of on that breakout. If it cools down there, that's a 12% move in the stock. That'd be huge. I don't see any positivity coming in. We're still in a downtrend overall. Crossing below, crossing back through. That's a bearish sign right over there. We got the cross on the MACD right over here as well too. Pushing below on the histograms. The histogram bars are still pushing lower right there. I might wait for a relief, jump into one of these a little later on. I'm going to let the moving averages kind of catch up a little bit, see what kind of happens with the market into the day. I don't want to be too aggressive. I've done well this week so far, so don't want to ruin anything. Don't want to get too overly excited. We'll just kind of watch and see what's going on. Back to reading some of these articles again. Based on our client discussions, a majority of equity investors have adopted the view that a hard landing scenario is inevitable at this point, and their focus is on the timing, magnitude, and duration of a potential recession and investment strategies for that outlook. That's by Goldman Sachs as well too. I don't even think that it's a potential recession anymore. We've been in a technical recession for about a few weeks now, almost a month now. Once everyone starts, I was reading somewhere, that once everybody accepts the fact that we are in an actual recession and not just, waiting for one, then you'll start to see a lot more of that sentiment down to the downside as well. And the numbers aren't looking good. Consumer spending is pretty much flat. You've got CPI still running hot. Prices are still going higher. The only positive thing as far as us and what we can pay for, is oil going down. So gas prices shouldn't be too incredibly hard right now, but that is also an economic sign of economic downturn. Nice slow steady grind lower. Q's pushing slow steady grind lower. Dow getting a nice little tag from that 10 period moving average right now. Should see it push a little bit lower, but this is I'm not liking this right here. All the histogram bars are starting to kind of head back upwards. You've got the turning around of the signal line through the MACD, so watch out for that as well. You've got the cross on the RSI already in oversold territory on the 1 minute, so we could see that push back up for a bit. So those are things to kind of watch out for, as it wedges down here a bit. This could have a nice pop, kind of re pick up some of those gains, like I said. It could just stay in that consolidation zone. Got plenty of sleep last night, so I'm good to go for the day. Pre-market movers, not a whole heck of a lot going on. I'm not 100% sure what's going on with Benzinga right now, but I wasn't able to pull up over the past couple days any downgrades, initiations, or anything. Keeps giving me this, so I can't pull that up for you guys right now. I do apologize. But as far as the pre-markets go, we had not a whole lot going on as far as things that we trying to look at. Sava Sciences, that we're down 25%, so that was something to kind of pay attention for. I know that one of our members was trying to check that out. If we look at that at the moment, oops, that was down off some highs. That had a big giant run. So a lot of times this is what you see. It kind of resets a little bit too on normal. This is irregular price action for the most part. This is more of what you consider regular price action. So anything that you guys are watching at the moment, anything you guys want to look at for right now, we'll kind of run through a bit of the watch list. I mean, it's just a sea of red. Well, I mean, the things Peloton, I wouldn't trade Peloton whatsoever, even though we're right here at lows. This could be a chance where it's finally starting to push down. Roku, I do like the Roku stock sometimes, although it has been just nothing but a downtrend right there, breaking through some lows right over here as well too. This could be the break, push back up before it tags back down again. Our Snapchat shares are actually still a little bit on the rise, higher highs, higher lows, higher lows, higher lows. We'll see if this can kind of hold and get a rally over into the next week, but again, with the market sentiment. Tesla, exactly what we were talking about yesterday on Tesla. If this closed right in here, as you can see with that downward sentiment, got a long way to run down to the lows right over here, and if it goes further than that, you still have a big run that it could run to. That would have been a nice one to the downside. Look at that volatility pushing down right now. Qs aren't even getting Qs aren't really even getting a push down. They're still just kind of sideways. SPY still just kind of sideways for the most part, but Tesla just absolutely tanking right now. That right there, boom, came up, tagged that moving average. That's exactly where I would have taken an entry had I been watching that kind of thing. If I was doing it, and then look at that SPY put right there, that or SPY put, Tesla put, that would have been paying out very nicely. So I expect to see some good moves in the markets today. Things that we can kind of look for. Exxon Mobil, that's not looking too hot. So I'm sure Dave will be addressing those trades again today, right now. The energy sector just taking a big hit today. S&P futures off the lows now, getting a little bounce. Eli Lilly again closed right there above that. Opened up rather solid to the downside, but as you can see, it's just been nothing but climbing back up. This is one of those ones I was looking at to kind of get to potentially look at. I want to see it kind of break some of these highs, break above here before starting to get that confirmation. As of now, it's just making lower highs, lower highs. So this could be another rally before headed right back down again. Nvidia could have stayed in those Nvidia puts yesterday if I wanted to, but that was a nice move on Nvidia right over or in this little area here. Trading lower again today. I expect to see that semiconductor stocks are going to be following the overall sentiment of the market as well too. Very nice, Captain Thomas. SPY puts getting a nice little bounce on that right now. Look at that, just blew right through those levels I had yesterday. I had written a few weeks ago, a couple weeks ago. Very nice return on that. 3.21 divided by 1.22. Captain Thomas with a 163% return. Very nice. Can't get mad at those. Oh. Still just kind of flat for now. Below that support at 370. No pushback at the moment right now. We'll kind of see what's going on. It is 1046. Let's see how the S&P heat map looks right now. As expected. As you can see, oil and energy over here. Massive selling off in the oil markets over here. Even across the board, technology, massive selling over here. The banking financial sector, as we've been watching, massive selling off over there as well too. Everyone is they're liquidating their stock assets, their stock securities, equities, all of it. As you can see, let's pull the treasuries back up. The U.S. 10-year bond just on a rise. How many? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days of a rise of with no selling whatsoever in here. This move is definitely overextended, but there's really no reason why we expect to see this start to come down, especially with what's going on. 10-year as well too, up 0.27% at the moment. Look at the spike on the 10-year yields at the moment as we get that negative sentiment in the market going on. 3 years, 3.645%. Another positive day. As you can see, not as much people are piling into that to the 10 years or to the 30 years as fast. Yeah, but John, I don't think that's going to be for a while before we see something like that. You have to get a major catalyst to in order to get something along those lines. But yes, I do think that with the heavy selling, it is once you see it, it will make kind of a quicker recovery. It's just when and what is going to cause that. Because if we break these lows right here at 362.50 and we continue on further, it's no man's land. I mean, that's going to continue to just keep on running. As you can see, we're starting to get that slowdown right here, a little bit of a pop up here, pushing down on the 20 period moving average. We'll kind of see what's going on. Cross on the MACD over here. We've got those histogram bars kind of pushing upwards. If we can get a break above here, I could see some more upward pressure for a bit, but again, that's trading against the trend. That's always something we want to be careful of. We'll just watch and see. Switch back over here. Bitcoin back down again below. I'm on the wrong one again. Gold, look at that. Right there out of that consolidation area, right there. Right excuse me, that we had drawn. Nice low basing pattern right here. This is one of my favorite textbook things to play. As you can see, as it came down, moving averages are already pushing down to the downside. You know that there's a lot of negative sentiment, and it just right there, boom, released out of it. Starts pushing down, based out of there for a bit. No retracement back into the area, and then just tanked. Not sure what happened here. Probably some kind of news-driven event, but that was at 5:56 in the morning, 6 a.m., and then just since then, just nothing but selling for the most part. A little bit of a pop here, but then just short-lived as it gave it all back. VIX, look at the fear. Look at the fear in the markets going right now. S&P Energy today just nothing good looking. Select sector fund pushing down. Right there, rejected off the 20, pushing lower. Candles below candle bodies. Right there at the low of the day, pushing even lower. Look at that. Should have stayed in those puts, guys. But again, like that's I trade the same way too. If I start to see any kind of reversal, I want to get out. I'll take the L and I'll look for the next. Not the L. I'll take the win and I'll look for the next one. Not too much else to say. I mean, there's a whole lot going on. We're just kind of watching and seeing what the markets are doing for now. If we see a pattern, I'll be looking as well too to get into some SPY puts. It does look pretty nice. What does that look like on a 5-minute? Just way far away from moving averages. Run through the watch list right now. Apple pushing below lows right now as well too. AMC stock, don't trade that one, but that one's bouncing up right now off lows. AMD, I'll switch AMD over to a red because I like those semiconductors to the downside. Amazon with a sharp sell-off. Boeing sharp sell-off. Baba, that's the fear of Chinese monetary policy right now is going on as well too. All these charts look the same basically. Caterpillar pushing lower right now, breaking those lows back there in middle of July. Wonder if there's anything. I guess puts all day for everything basically. Walt Disney, if it breaks those lows right there at 99.70, 99.50, we'll call it. That could have a much longer run on to the downside. We'll switch that over to here now. Just kind of see if it'll target those lows right there at 91.50. That's a big drop in the market. 8%. Could have a long way to go on that. Let's continue on. Enphase Energy. Now this is a stock that this is a chart that I really like as well too to the downside because as you can see right there at those lows, I'll explain why I like this one. These are what I call liquidity voids basically. When you see this is real style of trading, this is a little irregular, this is a little more real, a little more irregular, but you see how every single time that there's these big pushes down in the market this quickly, majority of the time you get it to fill right back up. Boom, big push, right back up, right? Big push, right back down, big down, right back up. So when you see this irregular kind of trading, a lot of times a term that I had heard from a gentleman that I learned from a while back was a liquidity void. And so when you see a void of liquidity, this is just buy side selling. I'm sorry, buy side pressure right here. So as you see this, a lot of times you see it fill right back up. So if this, as this closes today, if this closes red today, this might be one that I will actually be looking at to play to the downside for a few days going into next week. I wouldn't pick up those contracts until next week. I don't want to get that theta drain over the weekend. Basically, that is something that you always got to look out for because theta doesn't stop working on those option contracts even over the weekend. So you don't want to give into the other person on the other side of those contracts anything to help you out with. We want the advantage as much as possible. Plus, you also want to see what's going on. You want to see if it holds these lows. If we close below somewhere around in here, I'm probably going to be playing Enphase down to the downside, especially with what's going on. That's one to kind of keep an eye on. I like that chart a lot. As you can see, this is kind of what I'm talking about right over in here. So if we had a little bit of those bouncing, like those little supports right there, boom, 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 right? But we had that big gap that filled up, right? Or that was not filled on the other side. As soon as it kind of broke through, hesitated for a bit, but as soon as we got that downward pressure, boom, filled it right up in there. I mean, that's a pretty decent sized drop from, that's a almost 12% drop that it just filled right back in there and almost filled it up between 1, 2, I would call that 2 days. Had you bought in somewhere around up in here on that, the next day you'd be opening up lower and then pushing down even lower. So that would have been a good one to play. I love, 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 love this setup right here. Because this is kind of that nice run. This is a perfect little bounce right here off the crossing of the moving averages too. After getting that reversal in the markets, that's an excellent one. That one would have paid out nicely had you been patient and bought in there. And but again, after those big runs like that, this is one thing that I absolutely love to see right here is this nice area of consolidation for the most part. You see it come up, make that peak, tag right here, fail to get above and hold above those moving averages. So you start to see the lower highs forming. You're already starting to see the RSI pushing downwards. Even though you're making a semi run back up to the top, you're getting a much lower push on that RSI. Then you fail again right here. That is classic price action saying that you are failing and you don't have the strength to continue this run. And if you even wanted to get a little more technical, I mean, you can kind of draw a line there and it almost looks like it's wedging downwards. So that's one of my absolute favorite chart patterns to play right there. And then as soon as you start to see that confirmation, you see it catch up, you wait for it to get out of this area too. And then, this could, if you wanted to play that little gamble right there, you could have. But as you started to see it open up a lot lower with the market pressure that was going on. Boom, you enter in here, you play the rest of it to the downside. This would be your first target level. Second target level would be down there, which it's already hit. So that is one that I absolutely love to look at. See what SPY's back to doing. Big drop in SPY. Nice little consolidation again too. Now we're seeing that continuation of the downside. Not a whole lot. Not a whole lot of good things going on. Apple down. Where were we? We were on Enphase, Ford, FedEx. We just won't talk about FedEx today. Fastly breaking some lows right over here. Fastly's a kind of a good one. It's typically a pretty volatile stock, but it is a little bit. It is much lower than what I typically like to trade for smaller accounts. You could kind of do that. Google just been nothing but broke those lows and just continue to run to the downside. I expect to see a lot more downside pressure from that as well today too. As you can see, here we go again. That same exact thing that I talked about. Made those lows off of a big push, right? Came right back down to it. Lower highs, lower highs, lower highs. Boom, filled that little gap up right there quickly. These are things that you really want to pay attention for because these can be some really good moves going on. So as you started to see this push down, a couple days back, right? As it pushed right there below, boom, pushed. You got that confirmation that it wanted to go lower. Failed to get right back above that on that side. Push lower, lower highs. This could have been somewhere areas where you wanted to start looking to enter in, and then you were playing that down to about this first target level here for the top of that resistance or that support right there, and then this one would be the second. So that's one of my favorite charting patterns to play right there, guys. And that still plays hand in hand with I mean, I do think so. I absolutely think that we could see a dead cat bounce. You know what I mean? It's a lot of selling pressure going on in the markets, right? Especially after large, massive moves. Like if you think about it, from where that peaked over here before we even had any kind of this, that's still, I mean, on SPY alone, we're at almost 10.5%. It looks extremely overextended. I absolutely agree. I wrote it in the morning newsletter today that we could see a bit of a bounce or a hesitation or something, kind of something to fill up some of this liquidity void. This is a liquidity void down to the downside. This was not too big of a big run. You know what I mean? This had some little bit of some selling pressure, but then you saw those fill right back up again, and now we're headed even lower. Looking at these SPY contracts right now, the SPY contracts for today have a 51, 52% implied volatility. That's typically where you start to kind of get a little bit more on the side of being like, hey, you want to kind of watch out for what's going on. Cheaper contracts typically have around 20 to about 40% implied volatility. Anything from about 50 to 70, you're kind of looking on the caution for. Anything above 70 plus, that's where you're starting to be like, hey, you don't want to be jumping into this just yet. You want to see what kind of happens, unless you're scalping in and out. But if you're looking to like me today, I think we could definitely have sort of that downward selling pressure all day for the most part. This is a very overextended move. Moving averages are still just catching up, but right there out of that consolidation, boom, broke right out. We'll just watch and we'll see what's going on. Watch and we'll wait. Starting to see that upward pressure on the RSI, on the MACD as well too. You've got even though we're pushing downwards, you've got green candles on the histogram. Look at that. Perfect entry. Nice scalp down to the downside. I want to jump in as well too, but I'm not being chasing nothing. Wait for my confirmations. S&P down 1.8%. Look at that. Look at that drop in Google. Crude continuing to make new lows. I keep waiting for it too, man. I don't know. It's one of those days. But you want to be careful because you know sometimes as soon as you want to chase it and get into it as well too, it can sit there and it can turn right around on you. You know. All right. Those of you guys on YouTube, I'm gonna go ahead and get off for the day since we're not doing any trading whatsoever. You know, just wanted to do a nice little market roundup, like market analysis with everything that was going on. So thank you guys so very much for joining us today. Go ahead and like us on Facebook. You know, check us out on Facebook. Check out our website as well too. Join us. We do live trading with our members on Zoom every morning. You know, there is a bit of a delay on YouTube. If you want to get rid of that too, then you can message us for some of those pricing options. All right. You guys have a wonderful rest of your day. Okay.